Brexit boost as Dutch lead London stock market charge finance firm TMF to quit Amsterdam HQ for new base in the UK capital. A Dutch finance firm yesterday outlined plans for one of the biggest flotations on the London stock market this year in a major vote of confidence in Brexit Britain, as the city geared up for a string of listings that could spark a fees bonanza for bankers and other advisors. TMF said that once the deal is complete, it will leave its headquarters in Amsterdam for a new base in the capital. The company, which employs 7,000 staff in more than 80 countries and offers accounting, tax, and payroll services for clients such as Netflix and LinkedIn, looks set to be valued at around £1.4 billion when it goes public next month. Bosses at TMF said the Brexit vote has not been a barrier to the company choosing London, adding the UK's exit from the EU could actually present an opportunity. In a further sign of the city's enduring appeal, Russian energy company N+ outlined plans to raise £1.1 billion in London and Moscow, making it Russia's first listing in the capital since 2014. British Virgin Islands investment company J2 Acquisition also said it had raised £950 million through an initial public offering on the London Stock Exchange. LSE bosses are hoping to lure in the biggest deal of all, Saudi state oil firm Aramco, which is valued at about £1.6 trillion. It comes amid growing optimism for Britain's stock exchange, which suffered a fall in initial public offerings immediately after the Brexit vote, but has rapidly bounced back. More businesses floated on London than any rival in Europe, the Middle East, India or Africa in the third quarter of 2017, according to Accountant A. Its figures also revealed that foreign firms accounted for 12% of these listings and 56% of the £2.9 billion raised. The biggest hitter so far this year has been Allied Irish Banks, worth £10.6 billion, which raised £2.7 billion in one of the city's largest stock market listings for 2 decades. Shares in the firm, which was bailed out by Ireland's government at the height of the financial crisis, began trading in London and Dublin in June. PwC Director Hilary Eastman said, "Investors are still reasonably confident about the future for UK companies, which may explain why London is still seeing healthy initial public offering activity." And speaking at the Tory conference earlier this week, LSE Chief Executive Xavier Roulette said it would be conservative to expect a financial technology firm valued at between £100 billion and £300 billion to come out of London in 10 years. TMF's listing in particular will be seen as a huge feather in the city's cap after the business said Brexit presented a major money-making opportunity. It added, "Brexit has not been a barrier to choosing London. In fact, the UK's exit from the EU could actually present an opportunity to TMF Group, given that business complexity and companies moving across borders are key drivers of its growth."